Monday to Friday. This is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
Alex, finally, let me get your thoughts on Hong Kong markets, as we always do on a Monday. You've been very consistent over the last few weeks. You haven't been that optimistic, and rightly so, although you have suggested that there might be certain sectors that could outperform. But at the moment, the Hang Seng Index is the worst performer out of 92 global equity markets. Shanghai is not much further behind it, is negative, whereas most of the other markets around the world are in positive territory. Anything at all to turn you optimistic that you're seeing or could see on the horizon?
No, I don't think so. I think probably may not be too bad. I think we probably may see renewed interest in HSBC. Actually, we are already seeing renewed interest in HSBC. And that may help to support the index a little bit. And we probably may still see money inflows into defensive sectors like oil and telecoms. So basically, 5 or 6 blue chips may still remain strong, and that would limit the downside in Hong Kong. Consumption sector actually should be interesting because we are seeing better retail sales figures, and I think that one probably may worth looking right now. However, I don't think the property sector would have too much to recover. So overall, I think the old economy parks is still bad. And then also I think we are very disappointed about the reaction of the tech sectors last week, especially on Friday. They are still edging lower after the data, even though we are in the FTSE reshuffle last Friday. That may affect a little bit on the share performance, but I think the overall performance on the tech sector is still too bad. So I think people are still very concerned about the long-term outlook and the government stance toward private sector. So I think that will limit the upside in Hong Kong. So basically, we probably may still have less than 10 blue chips to outperform the market, and then that will help to limit the downside. But probably that means that we are stuck within a narrow range in the Hang Seng Index because the old economy sector like property and banks in China would still underperform, and then the tech sector would still underperform. So we do not have too much upside.
What about utilities? That's a traditional defensive sector, isn't it? We saw a big outperformance in utilities in the US over the last sort of week or so, which is sort of a signal almost of risk off. What about out here? Are utilities, are they something that you would look at?
No, because first of all, Hong Kong economy is shrinking. And then the higher yields actually also affect the values of utilities. And basically, I think people are getting hurt too much on utilities over the last few years. Many people used to hold on to Hong Kong E and CLP or China Gas. Actually, they lost probably 30 to 40% already. So I don't think confidence would come back easily on that sector. So I think people would prefer China telecom sectors and oil as defensive choices. And if they want to get yields, I think they also probably may prefer HSBC than other parks because HSBC is more globally diversified. So I think this one probably may be the one to go. Yeah.
So it sounds like from what you're saying, maybe for the last quarter, we shouldn't get too excited for the local markets. Maybe not much more downside, but not an awful lot either on the upside.
I think you probably have to look at another angle at Hong Kong. I just create a new index, just one share of China Mobile plus one share of HSBC and plus 5 shares of CNOOC. Then you have equal weights on the 3 best blue chips in Hong Kong. Then probably you think Hong Kong is in a bull market right now.
Okay, we'll call this the Alex Wong Index, Hong Kong Index. We'll start tracking it. Thank you both very much. Great to hear your thoughts there. You heard Alex Wong, who's director of Alex KY Wong Asset Management, and Lashar, who is Asia Chief Economist from BBVA.